300 series, SA 300, 315, 320 and 330, four standards of auditing. All standards of auditing are linked in a particular way. And what we've done today is, I think, in trend with what's happening also in the movies. The Lion King came first, Mufasa came later. So we've jumped directly to the audit report, the 700 series, and then we are going to the various standards which finally lead to the culmination of the auditor's report. Now, in the course material, what we'll be taking during the course of the day, we are covering 500 series and the 300 series. We are not covering the 200 series. We are not covering the 400 series. And we are not covering the 800 series. And let me give an overview of all the series, because when it comes to risk assessment, you carry the risk of technically not giving a true and fair view. Now, how many of us, and all of us, I believe, have signed some financial statements at various points of time and multiple times? So, have we read the standards of auditing in toto? And I profess that I would have spoken on this subject numerous times. I've lost count of how many times I would have spoken on the standards. I've cut videos for the institute on these standards. I've been a part of the Accounting and Assurance Standard Board. But I have also not read the standards in full. The point is, there's so many pages. SA 300, which we are talking about, 16 pages. SA 315, 56 pages. SA 320, 13 pages. And SA 330, 26 pages. So imagine the number of pages just these four standards have. So total, just out of curiosity and a quiz, how many standards of auditing do we have? Anybody? 38, right? I think whoever gave this is bang on. Now, in the auditor's report, we state that we have conducted our audit in accordance with the standards of auditing. So it implies that we know all these 38 standards of auditing, and where these standards of auditing apply, finally in issuance of the audit report. So it's non-negotiable not to know the standards of auditing. That's why we are here, to maybe know more. We know them, to know a bit more. Now let me just give an overview of the standards which we are not covering. SA 200 lays down the fundamental objectives of an audit, gives various definitions. 2110 is on audit engagement, 220 is on quality control, 230 is on documentation, 240 is on fraud and error, 250 is on laws and regulations governing an audit of financial statements, 260 is on communications with those charged with governance, 265 is communication of internal deficiencies to those charged with governance and management, 299 is on joint audit, SA 400, which we are not taking, is on service organizations, and SA 450 is on evaluation of misstatements. 500 series anyway we are covering. 600 series we are not covering, which is on using the work of an auditor's expert, using the work of an internal auditor, And then the 700 series we just did on the auditor's report, modifications in the auditor's report, the CAM, the OM and the EOM. Now what do we do when we conduct an audit? The basics. What do we do when we conduct an audit? And what is audit? And what is the responsibility of the statutory auditor? Because from them flows what we are going to discuss, and maybe some insights from all of you, because all of you are career auditors in practice, would have signed multiple audit reports over the time, would have come across various issues on the standards of auditing. So I would also like to be enlightened on some experiences. So what do we do basically when we conduct an audit? Risk assessment, fine. What is the key when we conduct an audit? Planning, yes. We plan, we do a risk assessment, but for what? So one is we form an opinion on the financial statements, and that opinion we form on the financial statements is whether the financial statements give a true and fair view and are free from material misstatements. That's the key. That's the key opinion we give. We might give, as we learned, a qualified opinion, an adverse opinion, or we may give a disclaimer of opinion, but whatever we are giving finally is based on our conduct of audit, use of professional judgment, professional skepticism, sufficient and appropriate audit evidence, diligence as expected from an experienced auditor, and these are all terms which are defined in SA 200. So we express an opinion on the true and fair view that they are free from material misstatements. Now the key is materiality as defined in SA 320, and we'll come to that, and misstatements, which is also covered a bit in SA 450. But then what is misstatement? We say that the accounts are free from material misstatements. So what is a misstatement? So one is suppression. So with suppression means omission. Anything else? Yeah. So the key, the misstatement as understood, as expected, and as defined by the standards of auditing is that this financial statements are relied upon by various stakeholders, and the opinion which we give on the financial statements is on those basis a lot of key stakeholders take decisions, and if the opinion is such as would lead to any decision maker to take a different decision from what he would have taken had these accounts given the true and fair view which it rightly deserved, and it is misstated. So misstatement is it covers any acts of omission, commission, misinformation, misrepresentation, but finally which leads to any decision maker taking a different decision from what he would have otherwise taken. So that's misstatement. And what is materiality? When we're talking of materiality, what is materiality? We've used this word right from our articleship days. Material is significant, yes. Significant what? So one, significant to overall presentation, right? That's just one point. What else? So data, yes. Going concern, yes. The threshold amount which influences. So finally, misstatement which influences the decision making, all connected. So whatever affects true and fair view is material. So all of these, but materiality is not just based on amounts or transactions. Materiality is also based on presentation. Materiality is also based on classification, and materiality is also based on disclosures. So if some disclosures are mandated and if they are not given, and as a result any decision maker forms some other opinion, this was material. So materiality is not just to amounts, thresholds. Generally we understand materiality in terms of amounts. Some percentage, 20% के ऊपर है material है, 1 crore के ऊपर है material है. So materiality is not just to transactions and amounts, it is also to disclosure. You make a wrong presentation, you make a wrong classification, if it is affecting the decision making of any stakeholder who relies on the financial statements, it's material. Now having known what we are doing, then it's easy to basically plan for the audit. Now what is planning? And SA 300 talks of planning and audit of financial statements. Now before we plan, first is at SA 210 we need to see whether we are independent to actually accept the assignment. I am assuming we are independent and we have accepted the audit assignment. SA 220 talks of quality control. So you've had all the quality checks including the 6 responsibilities in SQC1. So we have an audit partner, we have an quality control reviewer as mandated. SA 230 talks of documentation. Principle is there's nothing called oral documentation, it's everything is written and captured as an audit evidence. Sufficient and appropriate audit evidence which we have deployed while conducting an audit and which is all documented and which can be demonstrated. We've considered all laws and regulations as are necessary to conduct the audit. 260, 265, 299 joint auditors, the responsibility will vary as what is my area, that would be what is planned. Now planning and audit of financial statements, that's what the essay is, 16 pages. And while I end, I'll just go with what is expected to be captured in the audit plan. But we all know and we all plan how an audit is to be done. If you are doing the audit for the first time, a planning would be different. If we are doing it as a recurring assignment, our planning would be different because a comfort level will be much more. But what are we planning for finally? When we plan an audit, what are we planning for? Depending on the assignment, but I believe we only have one assignment, that is to give the true and fair view. It could be any industry. The final plan is as simple as what is the methodology you would deploy from the time you have got the audit engagement to the time you have signed the audit report, and at the time of signing the audit report, what opinion you give, you do not know at the time of planning. Clear? आज मैं ऑडिट स्टार्ट कर रहा हूँ, मुझे नहीं पता कि मैं एडवर्स रिपोर्ट दे रहा हूँ, मॉडिफाइड क्वालिफाइड दे रहा हूँ, मॉडिफाइड एडवर्स दे रहा हूँ या क्लीन रिपोर्ट दे रहा हूँ या डिस्क्लेमर दे रहा हूँ. So my planning would be that finally I would express an opinion, and this would be in the normal course that I express a clean opinion. So what am I doing? Start to the end, and various standards which are mandated is what I would cover. And I state, and I ask this question to everybody: how many of us have actually typed the audit report, or have you actually cut pasted it? Last year का format है और template है, हमने वो template follow किया. And that's where I say is the biggest risk. The risk is that since we have not actually typed that we have conducted the audit in accordance with standards of auditing, when we would have actually typed it, we would have been more reflective and more introspective that have we really done our audit in accordance with the standards, and we would have gone into the standards a bit more in depth. The second is, again we state we have conducted our audit and followed all the ethical requirements as stated in the code of ethics. This is also what we state, and we are basically independent. Now, how many of us and the institute in the SA 210 before accepting the engagement states that we need to be truly independent, and there are tests of independence which are there, as well as tests of independence which are given in the code of ethics. So how many of us have actually read the code of ethics? And this is a risk. The biggest risk we carry is we say that we have conducted our audit in accordance with the standards of auditing, and we have not read the standards of auditing, and this is what the NFRA finds as a very soft target. And we generally blame NFRA for going very hard on us, whereas we are also responsible for giving them an opportunity to find us as sitting ducks. The second is the code of ethics. How many of us have actually read the code of ethics? And we all state this. So the code of ethics, we had a session yesterday. So just for stats, the code of ethics which we are following is the one which is applicable from 1st April 2020. It's the 2019 edition. This is the 12th revised edition. The first edition came in November 1963. Post that, there have been 11 revisions. This is the 12th revised edition. And are you aware how many sections this code of ethics has? It is 293 pages. And how many sections it has? 999, but it starts from 100. So there are 800 sections. Now, each of these sections covers a lot of issues, and again it says that these are just illustrative, not exhaustive. So this is what we are actually supposed to do. So that's before we come to planning, and all of these are interconnected. We come to risk assessment, we come to auditor's response to assessed risk, which is 330, and in between is 320. All of it is based on materiality. If it's not material, maybe we can skip it. Now, materiality is again a matter of auditor's judgment. It's his professional judgment. He is to take a call, what is material, what is not material. Now, assuming and presuming we know the standards of auditing, we know what is to be done, what is expected of us, we've complied with the relevant code of ethics, the 800 sections, and there is a specific section also to members in industry. It's not just applicable to members in practice. Members in industry also have to comply with the code. Now, the SA 300 which we talk about is on audit planning. And what do we plan? And why do we plan? Yeah, why do we plan? So to complete the audit in a timely manner, to basically have a checklist so that we do not miss out on anything which we are supposed to do. And it becomes easy for our juniors or assistants to know what is expected from them, what is expected, when is it expected, how is it expected. It becomes easy for the quality control reviewer, it becomes easy for the signing partner to basically conclude and express his audit opinion. And the plan is the basis on which then we implement, and then we take the sufficient and appropriate audit evidence, we conduct the various documentation as is needed. So that becomes a base for us to withstand the test of any peer reviewer or the NFRA. Now, what the guidance states is planning not just at the time of accepting the audit, because that plan will be based on our understanding of the audit at the time we would have done an initial walkthrough. The planning will subsequently change, the plan would be modified based on the various information which we get during course of audit. Circumstances may change, rules and regulations will change, the plan may need modification. It's not just a static plan, it's a plan which is also modified from the time we started the audit to the time we conducted the audit. And if there is any change, we will need to modify the plan. Now, we all plan, and most of the planning is in the mind. If somebody could develop an app which could read our mind and translate it into the format as is required by the SA, then we have met all the requirements. Then NFRA can't do anything, nor can the peer reviewer do anything. So this is great work which the coders would have. Our issue, our problem is, we know what is to be done, we really don't document it effectively how we have done it. We all have a plan. We have a plan for everything in life. Same way with audit. We have a plan. Have we really documented in the manner in which it is needed? And that's where we are not trained. We are experts in execution. We still lack while actually documenting what we have done, how we have done, to what extent we have done, if we've used sampling. So the plan has to be documented. If the plan has not been modified during course of audit, then maybe even document the fact that there have been no change in circumstances, people, laws, regulations, and that's why this plan stands the test of the period of time during which we conducted the audit. Now let's say there is a peer reviewer and he opens up a file. He asks for the audit plan. You will have to show him the audit plan. Now the ideal audit plan is prepared at the time we have accepted the engagement letter, we have had the understanding and drafted the audit plan, which is subsequently modified. There might be amendments from time to time, and that's the real flow in which the audit plan would be. The issue which a peer reviewer finds is that most of the time the audit plan is made after the audit is done. So you've signed off our accounts and the plan is made afterwards. And at times for a seasoned peer reviewer, it is very evident from the goof-ups we may have done in certain dates or some way which would have captured the plan that it's a post-mortem exercise. The point is we will just be given a warning by the peer reviewer, then the NFRA may not be so lenient. Now, our SA 220 requires a quality control review. So there is somebody they have designated as a EQCR. And EQCR stands for an Engagement Quality Control Reviewer. So do we have EQCRs when we conduct an audit? So the expectation is that the EQCR signs off on the audit documentation first before it's discussed with the signing partner. So the entire documentation is ready before the audit partner even has a discussion with the CFO on the financial statements. Another mistake what we do is the blurred understanding which we have between those charged with governance and management. Because our essay states communication with those charged with governance. Now, who is those charged with governance? What's our understanding? Stakeholders, yes. Any other view? Why should a vendor who's a stakeholder be those charged with governance? How can he govern our organization? My view. The CFO. Then who's the management? Those charged with governance are the board of directors. Simple. If in a company there is an audit committee, then those charged with governance is my audit committee, maybe very specifically the chairman of the audit committee. So my communication, when it specifically states communication with those charged with governance, have I actually communicated to those charged with governance? Frankly, how many of you have communicated to the CFO and not the TCWG? That's one basic error which we make. Now let's say we talked about SA 700 series as a prime example of an violation of a standards of auditing. We've noticed the qualification. What do we do? Practically, what do we do? We find something is misstated. So we may discuss it with our partner. Let's say we are not the partner, we are an audit manager, senior audit manager, audit director. We would discuss it with our partner. Fine. Then what do we do? The partner finds out that it's a query worth taking it forward. Whom do we take it forward to? Management. So the CFO. What does our essay say? So at times we've read the essay, we've not read it in depth to understand what the essays require us to do. Communication of internal control deficiencies to management as well as those charged with governance. So while you may communicate it to the CFO, you also need to communicate it to the independent director. So you may write to the CFO, but you may keep the independent director in CC. That's the communication. Done. Just one CC mail to keep a record. The point is we assume that the CFO would have forwarded it to the audit committee. The second assumption which we do is the fact that when we have issued the draft audit report, the draft audit report is with the qualification, and that is always placed before the audit committee. So we have communicated it with those charged with governance. But my personal view, and which is what I do, the expectation and the spirit of the standard is you communicate the query, because this is in SA 260 and 65, is with those charged with governance at the inception of the query itself, and that is a correspondence where you correspond the query on mail or in writing with the audit committee, get their response, evaluate the response. If the response is in order, drop the qualification, depends on your professional judgment. If you are not satisfied, write to them further that I am not satisfied, I would go ahead with the qualification. So it's giving a reasonable opportunity to those charged with governance of it being heard and represented, and then only you go ahead with the qualification. So that's a process. As a peer reviewer, and I'm not a peer reviewer, if I come across any qualification, I'll ask for the correspondence. If the correspondence is not there, I will say you've not complied with your SA 705. Now SA 701 talks of CAM. What is CAM? Key audit matter. Where will this key audit matter come from? So when I say all standards are linked, if you have put something in the CAM, which all of us have put because somebody has put something on goodwill, somebody has put something on audit trail, somebody has put something on IT systems, we've also done it. The CAM necessarily comes, and 706 very clearly states that the CAM has to come from communications with those charged with governance. So if you have put a CAM as a peer reviewer, my first question is, show me that communication. And you have told them that this is what you will incorporate in the CAM. Now, a technical documentation part, but that's what is expected from us in the SA, and if we are not doing it, now what is our defense to the NFRA? You issued a CAM, NFRA will show me the correspondence with those charged with governance, because SA 706 says that the CAM should be a part of whatever you have communicated with those charged with governance. From the 50 communications you may have done, you might have found 1 or 2 material to be inserted as a CAM, and that's what you've done. So that again is a linkage. We talk of material misstatements, and we talk of audit work papers, which is a part of audit documentation. And when the manager discusses with the reviewer or the signing partner, he would evaluate a lot of queries, of which what are material enough to be either a part of qualification or you give it to the management to rectify. Now that is specifically covered under SA 450, evaluation of misstatements. Where is our documentation for that? Now, the simple documentation part is that whatever you are discussing, whatever you are doing, please make a minute of it, and please forward that minutes to management if appropriate, if it is not material, if it is material, to those charged with governance, as required by the SA. And my plan in spirit has to incorporate that I would do all this and comply with all standards. So I need to know all the standards, all the 38 standards, how these standards are all interlinked, and that's where I would plan beforehand, considering materiality also, considering sampling also. Now I also am issuing something called a ICOFR. What is that? We've all issued it, right? Internal controls over financial reporting. Have you ever qualified it? Yes, you have. So what was the process? So you have done your audit by whatever the methodologies are given: inquiries, representations, analytics, physical verifications, confirmations, whatever would be the audit tools to verify, which is all stated in the standards, and you would have come to the conclusion that there is a breakdown in controls. But specifically my SA 265 requires me to communicate internal control deficiencies to management as well as with those charged with governance. Now why management? Is because you want the management to rectify those internal control deficiencies, and you report on the internal control deficiencies in the CAM which are material, which are on the balance sheet date. So if there is an internal control deficiency, let's say during the year, you get it rectified on the balance sheet date, or you get it rectified during the date of signing of the audit. So as of the date of signing, there is no longer a material internal control deficiency. But an ICOFR qualification flows from communication of that internal control deficiencies with those charged with governance and management. And if there is a clean ICOFR, the peer reviewer or the NFRA will ask for whatever communications have you made with management and PCWG as per SA 265. Show me that. If there are such communications, then how have you evaluated that they do not form a part of ICOFR? So your identification, your assessment, your evaluation, and your final conclusion of how you have treated a particular issue is what would need to be documented and what would need to be demonstrated as having conducted the audit diligently. And there is another word which our SA 200 defines, is the word an experienced auditor. Have you heard of this? So if you have read the standard in depth, you would have heard of this word, experienced auditor. Now what do you mean by an experienced auditor? So fine, that's one. So apart from what are the requisites of an experienced auditor in terms of his competency, in terms of his skill, in terms of his skepticism, in terms of his diligence, it says that an experienced auditor would have come to a conclusion or a judgment about a particular issue in the same manner that would have been concluded by any other auditor of similar experience and standing. So it's more of a subjective definition, like what it is of a misstatement. And that's where initially, when we accept our audit, we say we are in compliance with the ethics, integrity, confidentiality, objectivity, competency, and due professional behavior. So competency is one which we have to evaluate whether we are competent enough to conduct the audit. I get some audit of an ONGC and an oil and petroleum gas company or some construction which I am just not aware. I am purely conducting bank audits. Then I need to take a call whether I am competent enough to do the audit, or if I may not be competent, whether I have equipped my team with the necessary competency who know how to conduct the audit. So I would, it's something like when you are caught for a traffic violation by a traffic policeman, he will check right from your PUC to the license to whatever. So if there is an issue, and let's say there is a fraud and you have been not caught, what was the auditor doing when this fraud happened, and you are called to explain how did you miss this. So one, apart from non-compliance with the essays which will be reviewed, we'll also jump to the fact that whether you are competent enough to do the audit. So you will not be booked under one section, you will be booked under two sections. And you didn't comply with the ethics also, and which you have stated. So you stated you complied or you conducted the audit in accordance with the essays. And the second, it will be that you stated that you have complied with your code of ethics, and one of the principles is competency, and you have not done that. So fine. So plan that you would do the audit start to end, primarily issue an modified opinion, no, primarily a clean opinion, then the risk assessment. What does the essay say? What is essay 315? What does it say? What is essay 315? It is on risk assessment. But what is the title of that essay? You can Google it. It is on risk assessment. It is identification and evaluation of the risk of misstatement through understanding the entity and its environment. Simple English. Now you tell me what is expected to do and what do you do. So what is the risks that you have identified? So I am the peer reviewer. Let's say you are the chartered accountants whom I am reviewing. So I will say, show me what is the risk you have identified when you are conducting the audit. Simple question. Fair for me to ask as a peer reviewer. Let's say I am not the peer reviewer. Peer apna hi aadmi hai. Usko we can manage. I am the NFRA chairman. Simple. I don't want to apply for a job in NFRA. But I can make more sitting ducks if I was an NFRA. That is more specific. But what is the primary risk? इसके लिए पहले सबसे पहले मैंने सवाल पूछा था कि हम क्या कर रहे हैं. हम एश्योरेंस दे रहे हैं, रीजनेबल एश्योरेंस that the accounts give a true and fair view and are free from material misstatements. So the risk, the primary risk which auditors carry is the detection risk, the audit detection risk, that these accounts may contain a material misstatement and which may not be giving a true and fair view, and we are not able to detect it, right? That's the basic risk. Now, how do we take it a depth further? When we say that the accounts have been misstated or misrepresented due to an act or omission, and again we have SA 240 which says which could be intentional due to collusion and circumvention, so that it would be a fraud. So that risk is also there, the risk of fraud, and the risk is for real. So we are not a Pomeranian, we are a Rottweiler. The watchdog, bloodhound. So what can possibly the balance sheet, the P&L and the cash flow, which are forming a part of the financial statements with the notes to accounts, which we finally certify, what is that detection risk? Simple. The assets or the liabilities could be understated or overstated. The expense or the income would similarly be overstated, understated. As a result, the profit for the year or the loss for the year could be understated or overstated. The provision for tax could be wrong. A net profit after tax could be wrong. Your earning per share calculations, even the basic and the diluted, would be wrong. Your cash flows could be wrong from investment, operating and financial activities. The classifications could be wrong. So misstatement is not just due to amounts, it's also due to presentation, classification. Again, the disclosures as warranted by the standards, by the framework. The regulator would have prescribed some mandatory disclosures, they would be missing or they would be incorrect. Basic risk, have we captured this basically and then made our plan and the methodology? So this is linked, the 300 plan and the 315th risk assessment. Risk assessment will then flow, then will be the understanding of the entity whether there are any specific risks. So ideally, if you are in an oil industry, the stocks would be in tanks where you may not be able to verify. So you would be relying on certain calibrations, certain assessments or certain expert confirmations. Actuarial valuations you may not know, you would rely on an actuary, again using the work of an expert, SA 600 series. When it comes to inventory, we have SA 501 which talks of specific, apart from all the standards, SA 501 which primarily nobody has read, talks specifically on inventories, on completeness and existence. It talks about litigation claims and it talks about segment reporting. Then you have SA 400 series. SA 400 talks of using the work of a service organization. So take a mutual fund industry, the NAV calculation is outsourced to somebody else. It's a service industry. Let's say you have done your tax workings. In a lot of organizations, the Ind AS working or the Ind AS disclosures are given to an external vendor. And since this is a part of our financial statement, you'll have to evaluate the controls at that vendor. So it comes under SA 400. So basic risks. One is the non-detection risk. The second is the risk that I would not have complied with the accounting standards or not conducted our audit in accordance with the standards of auditing, or would not have complied with my code of ethics. Now what is the auditor's report? सबसे पहले ओपिनियन आता है, उसके बाद किसकी रिस्पॉन्सिबिलिटी आती है? And again, the biggest risk is we cut paste. How many chartered accountants have actually typed the audit report themselves? Why not when you became a CA? None. So management responsibility and auditor's responsibility also is cut pasted. उसमें dates change होते हैं, गलती से rarely we forget to change the dates, and we just change the qualifications. नए कुछ qualification आ गए, year change कर देते हैं, dates change कर देते हैं. And management responsibility, we state a lot of things. Can we recollect what we state as management responsibilities? वो उनकी है, हमको क्या करना है? But we are stating this is the responsibility, and we are stating that the management has effectively and efficiently discharged their responsibility. अगर वो discharge नहीं किया, that's a separate matter of qualification, disclaimer, right? Again, what are the basic audit risks? We don't get the data. We get incorrect data. We get data not on time. We may get good food but not good data. Or we may not get good food also. Double whammy. Data मिला, हमने query भेज दी, response नहीं आया, response गलत आया, हमने A मांगा, उन्होंने C दिया. We ask a question to Amar, some Anthony will come and answer. Now when you have raised the queries, the responses you get combine to make some finding, some assertion, and then when you go to the top CFO, he will take some paper from somewhere and just prove to you that you were a complete stupid guy all along. Then there is the risk of being intimidated. Boss, how many of you have done bank audits? कितने लोगों ने MOC पास करने के बाद ब्रांच मैनेजर जो आपको मिलता नहीं था बराबर, सडनली GM आया आपको मिलने? कॉमन? So the risk of being intimidated, the risk of being asked to dilute a point, that's the risk. And that's the risk which would lead to a risk of material misstatement. Now, whether that is material, which we all saw, and what is the essay for materiality? What does that state? Again, you can Google. There's an essay 321 materiality. What is that? So the institute, when it has made certain standards, obviously it has used all its brains and experiences and expertise. So it talks of materiality in planning and performing. So what does that mean is the materiality levels at the time you plan the audit could be 1. As you perform the audit, the materiality levels may change. Now as a peer reviewer, I'll ask you, show me the materiality thresholds. You may bring out something. Now I'll ask you one more question. What was the materiality threshold at the time of planning? and during performance, has it changed? Now let's assume you are not aware that there are two different materiality levels as mandated by SA, but you are a smart CA. So your obvious answer would be that no, the materiality levels have not changed. They are the same. So I am a smarter peer reviewer. I would say, show me the evaluation that they have not changed. Where have you assessed? And what is the conclusion of your assessment that the materiality levels remain the same? Now one simple statement also कि पहले हमने ये किया अभी ये किया, there's no change, whatever you document a rational a story. So I think institute के जो conveners है, when they conduct an workshop on standards of auditing, they should also take a Salim Javed to guide you on how to write a story on how to document comprehensively and an unedited, uncensored version of your script, and then you could edit, or as you said, what you think, why materiality levels have not changed. So the key is, if you are aware that materiality levels have to be fixed at the planning and performing stage, then you would document. If you have not read it, you are not aware of it, you would not do it. Now we are lucky that the peer reviewers most of the time also don't know it, but the NFRA knows it. It's because NFRA is just sitting on the left hand side with our standard and right hand side में हमने क्या किया है. And what are our standards? हमारे standards are inspired. We don't say inspired, we say they are benchmarked, or they are in sync, or they are in convergence, better words, which also Anu Malik uses, with the global international accounting standards. And these standards, as I said, it 4 standards, 16, 56, 13 and 26. So 16 plus 56, 72 plus 13, 85 and 26, 111 pages के सिर्फ 300 series है out of 38. So your total standards would be easily 1000 plus pages जो हमने पढ़े नहीं है. And they are so comprehensive, and they again say they are illustrative, not exhaustive, and they also give examples, and most of the examples are commonplace examples which we face in daily working life, which we don't comply, and we are sitting ducks. Now one good thing is it covers everything. तो किसी ने पढ़ा है उसके लिए complete आसानी है audit करने, किसी ने नहीं पढ़ा है तो वो फंस जाएगा. Now institute has realized कि members don't read standards. So at least उन्होंने, if you see the standard, there's something which is in italics, bold. So they have said कि 50 पेज में से 10 पेज important है, ये bold में ही तो पढ़ो और वो करो. If we can even do that in spirit, fine. But whether we have read even the bold part, चलो इंस्टीट्यूट बोला वो भी नहीं तुम करते, मैं तुमको रेडीमेड चेकलिस्ट दे देता हूँ. So institute has now come with a checklist on standards of auditing. Now then there is no excuse. हमको चेकलिस्ट दी है, हमको उसको फिल ही करना है ना. हम कैसे फिल करते हैं उनको? Yes or no? So some firm called me to review its documentation, and they said so a lot of them use audit tools. So audit tools come up with checklists. Institute also has a checklist. So whatever audit tools you may be using or whatever checklist you may be using, there are questions which go in a complete flow. So one is we write it either by yes or no. Now, if yes, my question is, on what basis are you stating yes? It's based on what you did, how you did. So अगर मैंने XYZ रिपोर्ट देखा है तो रिपोर्ट में 100 पैरामीटर्स है, मैंने कौन से पैरामीटर्स देखे एंड कितने ऐसे ट्रांजैक्शंस देखे? I would have done a sampling. So please state what I did, how I did, to what extent I did in the documentation part. If it's no, the basis for saying no. And then finally, the auditor's response to assessed risks. Now, what is my response? I know the risks, right? Risk basic hai. If I know my basic risk is the detection risk, and I have not complied with the essays, I have not complied with the accounting standards, I have not complied with the code of ethics. As a result, the balance sheet and the financial statements do not give a true and fair view, but I am stating that they are giving a true and fair view. The disclosures are incorrect, either omission or commission. The classification is wrong, the presentation is wrong. That's my risk. So the basic person who is conducting that audit should know that this is the risk. अगर उसको पता ही नहीं है, वो क्लैरिकली फिल कर रहा है, तो that documentation would not be as per spirit. Later वो कुछ भी कर देगा, और आधे टाइम there will be gaps in what effectively or efficiently is filling up that list. So having known the risks, my response is what? What is my response? And at a very broad level, what would be my response? I now know the risks. What would be my response? Having identified the risk, having evaluated the risk as per 315, risk probability impact, let's say 5-point scale, very high or critical risks or high risks, important and urgent, वो matrix B. What is my response? There are concepts of risk appetite. Risk appetite यानी मुझे, do I have the appetite to sign an audit report where it may give a true and fair view, there might be frauds. So you are doing an audit of a large bank, or let's say an insurance company, or a mutual fund. Abhi kuch news आई, somebody was charged in a mutual fund of front running, which is a fraud. So how many of you believe कि frauds would be happening in any organization, especially in accounting frauds, evergreening, window dressing of the financial statements, especially in listed companies, especially small promoter driven companies, where now the stock markets and the equity prices play a major role, and most of us are equity investors. So the risk of fraud is for real. So that's also one risk. So what is my response? One is, do I have the appetite to sign? If I don't have the appetite to sign, I should not accept the audit. Now, having accepted the audit and having known the risks, then my response would be to get these misstatements to a threshold below materiality levels. And whatever my response, by way of whatever the audit techniques I do, I use experts, I use quality resources, I use quality audit tools, automated tools and techniques, training, development, skilling, empowerment, using the work of experts, oversight, monitoring, planning, following up with the plan, sampling, audit evidence, sufficient and appropriate audit evidence, management representations, balance confirmations, going concern evaluations. I would do all as required by my standards of auditing, as a diligent auditor would have done. Ensure that yes, I have done all I could to ensure that the risks of material misstatements are not there. Even then, you may still run a risk, but if you have taken due care, then maybe the blow which you would get would be much lesser. So maybe you could be penalized otherwise for 1 crore of rupees, you could be penalized for say 1 lakh of rupees. If you had to go in jail for a year, you may go for 1 day. So it depends on your negligence or gross negligence. If you have done everything with diligence, but still there is something, there can still be something, because you obviously can't do 100%. Something may be outside the sample, but if you have had a great sampling methodology and end-to-end the test of controls and the substantive testing as is needed in audit evidence, you have done all that, you followed the assay, and still there is an issue, we need to accept it, but it's a risk well within the risk tolerance, and we at the most may get a warning or maybe a reprimand, and that's it. So assays are what will save us. Compliance with the assays in entity, in letter and its spirit will save us even more effectively and efficiently. Knowing what is materiality, knowing what is misstatement, knowing what is my auditor's detection risk, what am I supposed to do, how am I supposed to do. If I know the basics, if my basics are very clear, then I could plan, I could execute, and I could conclude that the respectability, the reputation of the profession remains enhanced. So it's always pride of service before personal gain, and that's the spirit in which each one of us should conduct the audit in accordance with the letter as well as the spirit of the essay. Thank you. Any questions? Or the lunch is better, so we can all move. Hope what I talked made sense. So I don't use a presentation, prefer to be in a flow. End on time. I said a part of a professional speaker who, even if he starts late, would end on time. Huh? Yeah, you know. Yes.
Hello.
Obviously, because let's assume that there has been a fraud. When there has been a fraud, and obviously the auditor would be called into question. But abhi और एक बंदा आ रहा है questioning में, is the peer reviewer. So पहले peer reviewer was a good side professional assignment without any responsibility. It's not so. So the peer reviewer has to be aware of the standards, what is the documentation which is expected, what is the minimum qualitative documentation which should be there. If there is an issue with the audit, and if the peer reviewer has given a clean sheet peer review, he is also called into question. So peer reviewers are also a worried lot. Yes, that's why I said they are a worried lot. Institute is apna institute hai. It will obviously help us. Peer reviewer is our friend, philosopher and guide. He'll help us. NFRA is a policeman. And again, I think they are finding things is because we are letting them find things. ऐसे नहीं कि कोई इन्वेंट कर रहे हैं और कुछ गलत ये कर रहे हैं. जो हमने लिखा है हमको करना है, अगर हमने नहीं किया, they're questioning us. You said you will do this. It's your standard which says this. Your code of ethics says this. You have written in your audit report that you conducted your audit in accordance with the standards of auditing. You have written in your auditor's report. So you have certified. Now that is false. So I should be accountable for falsely certifying things which I have certified. So that's where I said, am I cut pasting or am I actually typing so that I understand the seriousness of what I am typing? So this is the independence is not there. If you read the code of ethics, this is called a self-interest threat. Independence, you are certifying that an auditor is independent. Now if you are saying this is your bread and butter, and basically because of that you are not objective, there is a bias, there is an indirect intimidation or a pressure, that is a threat. Technically you should not accept the assignment. In the ethics is very clear, you refuse to accept, you decline. The other thing is the fees paid are very less. If the fees paid are very less, as a result you are not in a position to deploy quality staff as you would have done. You are compromising on the audit quality. That is a risk you are taking. Now if you are taking the risk, is that within your risk appetite? Yes. God bless. Till the time you are not found out or caught, everything is fine. Moment you are caught, moment there is a fraud, where frauds can happen anytime, anywhere. So the institute talks that whether you can recast the financial statements in extreme emergency, but having missed out in 1 year and having found that out in another year, better to correct in the next year with appropriate notes, maybe as a prior period wherever appropriate, and do it. Now, in one audit, we had missed out something in 1 year, as you said, and next year we found out, we corrected it. We were called into question by one shareholder that you found it out this year is good, but the last year's statements to that extent were incorrect. So I have to prepare a defense for that. I can't continue that mistake forever. I found out in 1 year, I corrected in the second year. If I would have left that mistakes to continue just because it will hit me and 5 more years would elapse, my punishment would be more. If somebody else detects it, it's even more. It's fine, I have only detected and I have corrected. To err is human, to forgive divine. So that's fine. That's then you need not. आप बोल के क्या क्या करोगे, उसको डराओगे खाली. You will give him his blood pressure will increase. If it's a factual error, it's a factual error. If it's an matter of judgment, suppose कोई depreciation provide ही नहीं किया, impairment provide ही नहीं किया है, inventories है, write off होनी चाहिए थी, inventories junk है, 10 साल से junk है, उसने नहीं किया है, आप उसको क्या पूछोगे? The only answer he'll give is sorry yaar, I missed it. You can speak with him, you can find his, but 9 out of 10 you'll scare him. So at a lot of times when we do a statutory audit, we come across issues which have just not been covered in the concurrent audit. So we call the concurrent auditor, we say at least you correct it in March. ऐसा नहीं मेरे correction से somebody else will come up and will hold you accountable. Now always the issue is there, should I own up my mistakes or should I keep on hiding my mistakes in the hope that somebody will not find it? Each one will have to decide. I would say fine, I'm a human, I would make an error, let me correct the error. I would ask for forgiveness. Huh? See, अगर एक profit loss हो रहा है और loss profit हो रहा है, then even small amounts could be material. The other thing is, एक 1%, 2%, would it impact your decision making? No. Subjective. But generally 10%, 20%, हम लोग 1% extra हो रहा है miscellaneous expenses में of the total asset size, we show it separately. So certain materiality threshold amounts are defined by, in a bank, MOC का level bank branch ही decide करती है. So you can roughly take those as a benchmark and go ahead. You can ask your fellow peers what materiality thresholds they used and take that as a base, but document it. Anything else? Thank you. Yeah. Hmm. So SA 501 specifically covers inventory. It should be complete and in existence, and valuation of inventories is basic. So if there is an inventory which has to be valued at cost or market value, whichever is lower, and you are still continuing to value it at market value, then it's a blatant violation of an accounting standard. It's a material misstatement. So उनको जो भी करना है, उनका प्रॉफिट का लॉस हुए, उनके लिमिट्स कैंसिल हुए, वो गोइंग कंसर्न से बाहर आके ऐसे 570 विल बी एप्लीकेबल, इट्स योर रिस्क, आई विल जस्ट क्वालिफाई or not qualify. I'll tell them you pass the accounting entry and book the loss. You are showing a wrong profit when there should be a loss. उसमें कोई सोचना ही नहीं है. The only thing is when ethics is for everyone, every time, at all times. T is the trust, H is the honesty, I is the integrity, the C is the courage to call a spade, and the S is you speak up, stand up and report. So in your case, you do what is the right thing. उसको क्या इफेक्ट हो रहा है, then that is again a familiarity threat, right? or a self interest threat. तुम्हारा क्लाइंट है, आपका क्लाइंट जाएगा, लॉस में होगा, बंद होगा, कल से मुझे ऑडिट नहीं मिलेगा, मेरी फीस कम होगी. The institute is not concerned, the NFRA is the least concerned. So if you read the code of ethics, the code of ethics has a detailed day on fees. Fees is not an excuse. Having accepted the fees, you run the risk. You can't, अगर मुझे 100 रुपए मिल रहे हैं, मेरा खर्चा 500 है, तो 100 रुपए के हिसाब से ही मैं 2 आर्टिकल्स रखूंगा जिसको कुछ आता नहीं है, and they may end a shoddy job, fine, your risk. Now whether somebody else is undercutting and accepting is our professional issue. So then you ask your elected members how to address it. Each one, if they refuse, then but क्या कर सकते हैं? That's why a lot of people. So if you can't do it at that cost, and there is a risk, because the risk of compliance is for real, that is why a lot of people are moving to other avenues of practice. That's a separate study of discussion, but these acts are acts. NFRA is not concerned with this. Your problem is legitimate. So the question is, we should separate the fees part of it and first to be paid by the government authority, because it is they people who want the reporting from us, rather than the client paying us. Where the client is paying us. See, so the base, so that is where there is an audit rotation. That is where the appointment is made by the stakeholders. So ये हमारे प्रोफेशनल hazards है. Is NFRA bothered about this? Then so is NFRA bothered about what CAs are representing? They said नहीं कर सकते हैं, हम दूसरी body निकाल लेते हैं, and they are okay. They'll have another parallel body. They are outsourcing work. You are complaining, fine, we'll give tax audits to cost accountants. We'll do your work. Attest function ही हमारे पास रहा है, वो भी जाएगा अगर आप बोलते हो कि आप कर नहीं सकते हो. So it's something like the Coke and the Pepsi. They came in, they reduced the prices and just killed them out of competition. So maybe that could happen in over years. May not happen because the institute is, after 75 years, have some standing, some competency. It's whether we are all united and whether a good firm is not willing to take the audit at that price, and then only a small firm is willing to take, and the shareholders are evolved and vigilant and do not want to have such firms, then only it will change. And that's where, if you need to fight, maybe that's where the concept of network firms has come in. It is yet to be evolved. But ideally, we are not living in competition. We are all competing with fellow chartered accountants and undercutting. It's ideally an era, I would say, of cooperation and collaboration, so that all of us, we co-create and co-elevate each other. Competition is just, it's I would say, the survival of the fitter among the fittest. It's not just the survival of the fittest. Among the fittest only, who will be the fit enough will survive. So professional hazard, yes, we can have a separate open session on that. Will you go with the flow, or अमिताभ बच्चन जैसे रेजिग्नेशन खीसे में लेके चल लो. स्टॉक मार्केट्स है, इक्वल अपॉर्चुनिटीज दे रहे हैं हमको. How many of us are full time active in the stock markets? Many. हमारे I was in industry, so a lot of my peers have resigned, have studied the markets well. They have their own algos, they have their own fundamentals and technicals, and then they invest and make much more money. हम ये सरदर्द ऑडिट लेके रिस्क लेके क्यों करें? So हमारे प्रेसिडेंट ने भी लास्ट टाइम एक फंक्शन में किया था, if you don't have the gumption, so it's not for the faint hearted. Audits are not for the faint hearted. Compliance risk is for real. ये है अगर स्टैंडर्ड्स है, हम चेंज नहीं कर सकते, डाइल्यूट नहीं कर सकते. देयर इज अ टॉक ऑफ स्टैंडर्ड्स बीइंग डाइल्यूटेड फॉर स्मॉल एंड मीडियम एंटरप्राइजेस, बट अभी तक हुए नहीं है. होंगे, बट तब तक तो वी आर लिविंग विद इट. एज लॉन्ग एज फ्रॉड नहीं होता है, या आप लिस्टेड एंटिटी नहीं कर रहे हो, और जैसे वो इनकम टैक्स स्क्रूटिनी में इफ यू आर लकी अर्लियर वो 3% में आए तो कोई डिसअलाउंसेस है, होने वाले, वैसे आप उसके जाल में आ गए, बैड लक, ठीक है, एक्सेप्टेड, वे ऑफ लाइफ, नॉट द एंड ऑफ लाइफ, राइट? या I can't hear you. Can you come ahead or can you give her a mic?
Because you see, audit happens at the end of the year.
Yeah.
And you need a stricter control on a regular basis, maybe concurrent audit or internal audit, because you need to have strong quality at the entity level. With they making up quality manuals.
So, but for your listed company audits, the appointments is well in advance. So if I am appointed as an auditor for 25-26, my appointment would be somewhere in July or August 25 at the audit committee meeting. So I have enough time. I have more than 7-8 months of the year to study all the systems. And having accepted this at the year end, that's the risk. You've accepted the risk.
No, what I mean to say is just as how you have RBI auditors which go directly to the...
You're talking of bank branch audits?
No, I'm just talking about in general.
Yeah.
Like in case of banks, you have RBI auditors which also audit, and you also have the normal auditors.
Yes.
So just as like you have listed companies, as you say, where many people are investing in the stock market.
So one is
could
apart
have
from
SEBI auditors going there.
Apart from RBI, who is doing the audit, there are CAG audits for listed companies who sit in review. There are in MCA, there is a team of chartered accountants, whose role is only to scrutinize financial statements and see whether there is any apparent discrepancy. And if they see any apparent discrepancy, many have got notices. So as currently they are putting it to the listed companies, because listed companies and big listed companies, the top 1,000 companies, are where public is interested. In a small private limited company, the major stakeholder would be the banker or some creditor. But as far as a listed company is, apart from these two stakeholders, the stakeholders will also be, apart from the regulators, the stakeholders will also be the investing public, which is huge. And there is global investment public. So somebody like a Satyam, it's the reputation of the country which is at stake. So obviously they'll be more careful. The oversight will be more stringent.
Yeah, so our main thing I wanted to say is that the oversight should be more at the initial stage rather at the audit end stage. You should have a stricter
oversight from whom?
No, I'm just talking about the auditing.
The auditor anyway has to have his oversight at all stages, right from accepting the audit. So if you see SA 210, it talks of a whole list of conditions which you should see, from independence to competency before accepting an assignment. So what they say is, having accepted an assignment, you are going with an open risk that this will happen. If you feel you are not having that risk appetite to conduct it, and your responsibility, because you have a huge responsibility to the public. If you feel you can't discharge that responsibility effectively and efficiently, you don't accept the audit assignment. They are very clear. You decline. And the precedent had gone on record. If you don't have the skills to conduct it, as well don't do it. So that's where your continuing professional education, that's where seminars like this create awareness. I really don't know whether we follow anything post it or we forget it over lunch. So the food anyway by the institute is quite delicious, so they make you forget. And then they make you sleep for the third session, so you just don't know what the third speaker is speaking. And if he also has the food, obviously both of them are sleeping. And fine, thank you. Thank you for...
Thank you, sir, for explaining various intricacies of SA 300, 320, 315, and 330 in a simple and lucid manner. I request everybody to give loud round of applause. There will be a lunch break, and we will gather sharp at 2:15 p.m.